The market is currently open, and Datavault AI Inc., trading under the ticker symbol DVLT on the Nasdaq, is showing significant intraday activity. Right now, the live stock price sits at exactly 41 cents per share, representing a sharp upward move of 13.19% during the current trading session, which translates to a net gain of 4.71 cents. While a sub-$1 stock making a double-digit swing isn't completely unusual in the microcap universe, what lies underneath this specific move is a massive structural disconnect between what retail investors think they are buying and what institutional algorithms are actually pricing in. The typical retail trader logs into their favorite self-investing apps, spots a massive percentage spike on a microcap ticker, and assumes it is just another speculative pump driven by low-float volatility or social media chatter. However, if you look past the superficial numbers on common investing sites, you find that this sudden valuation jump is tightly linked to a series of back-to-back intellectual property allowances from the United States Patent and Trademark Office, specifically anchoring a physical and digital asset tokenization network that the company claims underpins a $750 million commercial pipeline. The immediate expectation among casual market observers is that Datavault AI Inc. is simply another speculative player trying to attach trendy tech labels to an unproven business model to catch a quick wave of retail momentum. People look at the historical data, see a trailing 12-month net loss, and decide that the equity belongs firmly in the high-risk, low-reward pile of penny stocks. This skepticism forms the baseline expectation of the broader market. The reality, however, is far more complex and legally insulated than a typical microcap venture. By securing 3 major patent notices of allowance within a narrow window between late April and June of 2026, the company has effectively built a legal fortress around its tokenized asset minting, physical object authentication, and content data platform systems. When a firm with a market capitalization hovering around $335 million successfully patents the core infrastructure required to bind physical real-world assets to immutable digital metadata, it stops being a simple software vendor and starts looking like a potential toll booth for enterprise data monetization. This structural gap between public perception and legal asset accumulation is exactly where microcap inefficiencies turn into massive institutional battlegrounds. When retail investors utilize an individual brokerage account or run strategies through popular online investment platforms like Robinhood Stock Trading or the Robinhood app, they generally focus heavily on pure price momentum and basic volume spikes. They see that daily trading volume for Datavault AI Inc. pressing past 35 million shares against its 60-day historical average and assume a retail squeeze is underway. But if you analyze the order flow data that passes through institutional execution layers like the Interactive Brokers platform, you quickly notice that institutional footprints are beginning to quietly map out positions based on the company's recent operational pivots rather than social media hype. Specifically, the company recently announced a massive $2 billion structured financing term sheet featuring an exclusive global tokenization mandate, alongside a sweeping exchange agreement with Perpetuals.com designed to enable 24/7 global trading across real-world asset programs covering gold, copper, and geothermal energy. This is a massive leap from where the company sat just a year ago, and it forces us to reevaluate whether the market's current sub-half-dollar pricing is a severe undervaluation or a rational reaction to execution risk. To truly understand the internal mechanics driving this asset, we have to look closely at its recent financial reports and structural overhead, which highlight a distinct tension between accelerating expenses and lumpy revenue realization. According to recent quarterly filings, the company brought in approximately $3.42 million in revenue for the first quarter of 2026, which looks relatively modest when placed side by side with total operating expenses that exceeded $31 million for the exact same 3-month period. This massive operational deficit is driven primarily by an aggressive expansion in selling, general, and administrative costs, which scaled up to $25.33 million, alongside a steady climb in research and development outlays to $5.73 million. For any casual investor scanning basic metrics on generic online investing platforms, these numbers look incredibly alarming, suggesting a massive cash burn rate that could require dilutive capital raises. In fact, the company recently closed a $60 million public offering of common stock to buffer its balance sheet, an action that historically suppresses stock prices by diluting existing stakeholders. Yet, despite this dilution and heavy overhead, the underlying stock price has found a firm floor near its 52-week low of 25 cents and is actively building upward momentum. This resilience suggests that institutional buyers are looking past the current negative net income and focusing heavily on the underlying asset valuation models. Comment below how many shares of Datavault AI Inc. you currently hold, or if you prefer sticking to larger, more established tech equities in your portfolio. To get a clear picture of what this business actually does away from the chaotic ticker tapes of a typical trading platform, we have to look at its core architecture. Founded originally in 2010 and currently headquartered with specialized operational centers across Pennsylvania and Oregon, Datavault AI Inc. operates a cloud-based platform that splits its technical weight between 2 distinct divisions, its Acoustic Sciences division and its Data Sciences division.
The Acoustic Sciences wing features specialized wireless and multi-channel high-definition sound tech, backed by legacy intellectual property that the board of directors is currently planning to spin out into a completely separate standalone public company via a dividend spin-out structure. The Data Sciences division, which is the primary driver of the stock's recent premium, focuses entirely on data valuation, credential validation, and real-world asset tokenization. Through its proprietary information data exchange, the company allows enterprises to take physical real-world assets, create secure digital twins, and attach them to immutable digital metadata layers. This framework is designed to help organizations securely monetize their proprietary data assets using automated scoring systems, completely insulated from standard regulatory scrutiny or data privacy violations. This dual identity framework is precisely what creates such an intense tug-of-war between public market expectations and corporate reality. Most individual investors managing their retirement through standard vehicles like specialized Fidelity IRAs or automated options like Schwab Intelligent Portfolios tend to favor predictable cash flows and clear margin profiles found in mega-cap tech titles like Tesla stock, Apple stock, or Nvidia stock. When forced to analyze a micro-cap corporate structure that simultaneously sells high-fidelity wireless audio tech while building a decentralized quantum-ready edge network across major United States cities, the average self-investing participant experiences analysis paralysis. They look at the massive $2 billion structured financing announcements and struggle to reconcile that astronomical figure with a company that only logged a few $1 million in traditional quarterly top-line revenue. The reality is that Datavault AI Inc. is attempting to transition from a legacy software licensing model into an infrastructure-level transactional clearinghouse for tokenized physical commodities, cyber insurance risk modeling, and institutional data assets. If they successfully transition this transition, the current market capitalization will look like a historical anomaly. If they fail to convert their massive patent portfolio into recurring transactional cash flows, the capital burn rate will eventually further dilutive actions. When you look into the near-term future outlook for this equity, the trajectory is bound tightly to several massive upcoming catalysts and severe operational risks that investors must weight with absolute precision. On the opportunity side, the company's quantum-ready edge network went live with its initial infrastructure installations in major metropolitan hubs like New York and Philadelphia, with plans to expand across more than 100 domestic cities by the close of the calendar year. This network is designed to interface directly with the global cyber insurance underwriting market, using specialized data scoring technologies to help mid-sized corporations evaluate their internal data liabilities and lower their operational insurance premiums. This positions the company directly inside an expanding security ecosystem, a narrative that management actively pushed during key industry presentations at major insurance policy conferences this month. Furthermore, if the proposed dividend spin-out of the Acoustic Sciences division goes through, existing shareholders could receive direct equity pieces in a newly formed entity, creating an immediate unlocking of corporate value that is currently buried under the broader data science corporate umbrella. However, the reality of investing in micro-cap technology infrastructure requires an equal measure of caution regarding structural risks. The company operates in a highly volatile sector where institutional short interest, capital allocation shifts, and strict regulatory changes can disrupt operations overnight. Because the firm relies heavily on massive structured financing arrangements and long-term commercial pipelines to validate its technology stack, any delay in converting these legal agreements into liquid referenceable revenue lines will test the patience of Wall Street analysts. Right now, consensus data from specialized major market trackers shows an incredibly wide variance in future projections, with isolated 12-month institutional price targets stretching all the way up to $3 per share, implying a massive theoretical upside that contrasts sharply with the volatile sub-dollar daily reality of the tape. This extreme divergence highlights the classic psychological battle of the public markets. The expectation is centered on the historical financial strain of a scaling software firm, while the underlying reality is anchored to an aggressively expanding, heavily protected intellectual property portfolio that is built to capitalize on institutional asset tokenization. In summary, the narrative surrounding Datavault AI Inc. is defined by a deep structural contrast between past financial performance and future infrastructure scale. While the general market frequently looks at the equity through the limited lens of a speculative microcap asset subject to heavy daily swings, a closer analysis of their recent regulatory filings, patent allowances, and multi-billion-dollar structured financing agreements reveals an aggressive operational pivot towards enterprise data monetization and real-world commodity tokenization. The recent upward intraday move to 40 cents per share reflects early market recognition of these asset milestones, but long-term sustainability will depend entirely on management's ability to execute its city-by-city edge network rollouts and convert its legal patent portfolio into predictable, recurring transactional revenue. For individual market participants navigating the modern digital landscape, this stock represents a highly complex, high-beta case study in how intellectual property accumulation can quietly challenge public market expectations long before it fully manifests on a traditional corporate balance sheet. Disclaimer. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Bags. Don't forget to like, comment, and share this video to support the channel.